Greetings traders out there in trader land. My name is Dez here on Wednesday, August 8th, 2012. Stock markets barely go into the green, but in the day mixed. Headlines here say global shares flat as policy optimism cools. Oil futures mixed after surge on U.S. stock draw. Pound set for fall after the BOE paints gloomy picture. Euro edges lower versus dollar after soft German data. Gold edges up, trade thin as market watches central banks. And taking a look here at the Dow, we're up just a fraction. Same goes for the S&P, but the Nasdaq and Russell's laggy. Banks barely in positive territory. The VIX, get this. The VIX has been bullish, the VIX has been bullish, meaning going higher, while the markets are bullish. VIX is an indicator that is inverse to what's taking place in the market, so it should be going down when the markets are bullish. But for the markets to be mixed, you would think that the VIX would just be that much more bullish because of what we were seeing the last couple days, but instead we dropped by a full 4%. So all I'm saying here is the markets are getting toppy. We have a mixed market, and then all of a sudden fear dissipates. What gives here? It's craziness. And VIX is at 15.3. Gold up just a fraction, silver down a fraction, and we have crude oil down a fraction. And then we have US dollar up 0.2%. That was strong all day long, really putting a lot of pressure on the markets as a whole. However, the trend really bullish today at 0.68. Just real crazy market internals, to say the least. Take a look here at the S&P daily. We had a nice run last 3 days. Boom, boom, boom. Higher highs. But this is our first lower high. This is the chink in the armor. This is where things are slowing down. We have a lower high. We also have a higher low. This gives us an inside trading candle from the previous session. So with that, increases our chances of a reversal taking place. I think if we were to have a bearish day tomorrow, which I think is highly likely, that we will probably find some significant support right around 1392. So be remembering 1392 and 1393. So 1393, 1392, big time support. If we break that, next level, be looking at 1385. Big area there. If we can sustain these highs, meaning that we have another sideways candlestick, that will increase our probabilities of building a base and then busting out. We need to catch our breath here after a 3-day pop. Last time we had a 1, 2, barely a 3-day pop before a nice little sell-off. Here we're up 1, 2, 3, and 4, but the fourth one is kind of a faux candlestick because we did have a lower high. Keep that in mind. Now, the bottom line is we are way above all major moving averages, even above the exponential moving averages. So this is pretty good, but what the markets will always want to do is pull back to these moving averages, especially this blue one here. I know I have a lot of blue lines on my chart, but that blue one is my 20-day moving average. It's going to want to pull back there. For example, we pull back to the blue line here, we pull back to the blue line here, we pull through it there, we pull back to the blue line here. It's ready and it's going to want to pull back here. So this is a good time to hedge yourself if you have longs going on, especially if the markets start to go bearish tomorrow. Check out the site teachmetehedge.com. And let's take a look at NASDAQ. NASDAQ at Inside Trading Day. Again, nice pop. We're extended away from the moving averages, but the bottom line is we are outside the confines of this big symmetrical triangle we were in. Big pop, maybe a little pullback before a new rally. And on small cap, same thing, pop, but we have a major trend line coming down that we're going to have to contend with. And that would put us, if we do go bullish, right around 808. That would be a major area of resistance. Be watching that. And 769 or 796, I'm sorry, 796 is going to be a support area, so that would be something to be watching for. Oil right now is at $93.35 per barrel, and we have gold at $16.12 still. And Mark the Meerkat is on vacation this week and next. So for all those in this Grok chat room, thank you to you Grok graduates who have been stepping up, calling out plays, and being a part, an active part of making all of us a lot of money in the markets. Much appreciated. So, to all those who have signed up, we had a lot of people here recently signing up. Know that Mark Meerkat will be back in about a week and a half, and I'll be poking my head in when I can, calling out calls. Had a nice trade on DLTR today. Let me just show that to you. DLTR. It was on a 1 minute. Mind you, gang, I am long this stock off of my Stock Picks V newsletter. I talked about this and we entered this trade, so I'm in this one as a swing trade, but I also day traded it today. Let's go to a 1 minute chart, go back, see if I can find this real quick. What we're looking for is the trade. It's right here. So what grabbed my attention early this morning was this huge volume. Boom! Busted all this resistance. I did not enter into this yet. Waited for a little pullback and then called out the entry. Had a little pop and then a run. Another little bull pullback right here. Stop out on these lower lows. Pull back, look for a new entry. And that one just didn't come to fruition. It just based for a while. So anyway, check this out. High base formation. I was gone at this moment, but look at this. High base. Look for a pop. Boom. Moneymaker right there. So anyway, had a nice little bull pullback right here to the rising EMAs, and that popped for a little bit. Would have pulled out some money there. A little bear pullback here. Anyway, this one's swinging so nicely, very nice. So that's what we do in the stock or in the Grok chat room. Feel free to join us. You can actually join us right now if you want to. Just know that the guy that usually leads it is not with us, and it's usually in the morning hours. But you can join us free for 30 days with no credit card down. Just have to register to do that. So that's it. Take care. Safe trading, gang, and we'll see you in the morning.